Hello everyone, happy Fed's rate day. In today's video, we're going to talk about what the Fed did today, what the next steps are for the market. We're going to take a look at the S&P 500, the NASDAQ, the Russell 2000, the dollar, the bonds. We're going to take a look at the McClellan oscillators to see if there's any change so far in the momentum of the market and where we could see a potential bounce if there's going to be a bounce. I'm going to put all of that together for you guys in today's video. So without further ado, let's get started with the video. All right, so number one, the federal fund rate remained the same. So we didn't have a change in anything. And if you guys remember this Fed watch tool, CME Fed watch tool, obviously the September meeting is not going to show here, but when it did show, we saw that there would be there was like a 97% chance for probability that during the September meeting, there would be no change. So now, this is the November meeting, November 1st. So we can see that there is a 71.6% chance that there won't be a change. And there's a 28.4% chance that there's going to be a hike. So this tool is pretty accurate in depicting basically what the probability of a rate hike is going to end up being. And we'll monitor this closer as we get closer to the November 1st date moving forward. He also basically said that there's going to be a chance that we'll increase rates before the year's end. And he's just a very, very good talker. He knows how to answer all the questions really, really well, to be honest. So he does a pretty solid job of giving people hope that they're going to be able to handle everything that's thrown at them. Then at the same time, he gives like a few sprinkles of, oh yeah, you know, this could still be a problem. That could still be a problem. But don't worry, we have it all covered. So that's basically, it's just a lot of PR work that we're basically watching when he does talk. But yeah, you know, big move in the market, basically. So before we take a look at the overall market, I want to take a look at the McClellan oscillators. So this is the NYMO, and this does a very good job at showing tops and bottoms. Okay, so right now, while the indicator is red, it's basically showing that there's bearish momentum. And basically, we can see that we crossed below multiple moving averages, and the indicator is red. Okay, so clearly, I don't want to draw this out long, showing that there is bearish momentum very clearly. All right, the other indicator is the NYSI. Similar in that when we show red right on the indicator, there is bearish momentum. So that is also clearly showing right now there is bearish momentum on the market, right? So I wanted to show you these in case, like, oh, you know, maybe we got to a certain level of support, maybe it's going to start showing some bullishness. No, not yet. We're not seeing anything of that sort just yet. Okay, so for the McClellan oscillators right now, they're still showing bearishness. So now when taking a look at the market, right, so one of the main reasons why I was not very, very bullish as we came back to 443 was the lack of weakness in the tech stocks, as well as the fact that this is a very bearish technical pattern. And I was also saying that it would be very, very unlikely that we come and break above this level here. And if we did, then everything would be a shorting opportunity. And basically it never broke above and we broke below first. So yeah, this was basically a very bearish pattern. And the tech stocks did not help as we came back to 443 as they did before when we first bounced at 443. So the tech stocks took a dive, and the overall market obviously also took a dive. So now we need to see how much more room there is to fall overall in the market. All right, so let's first just take a look at the large tech stocks. So first of all, let's take a look at Apple. Apple by no means does it look good, but it's still holding above the 175 level of support. Nvidia is trading outside of the lower level of the Bollinger Band, but you can see that the Bollinger Band is pointed sharply lower. So most likely, even if we do open a bit red on Nvidia, it'll still be within the Bollinger Band. So it won't be trading overextended to the downside. And if it trades very, very overextended to the downside in terms of where the Bollinger Band is, then there's a higher likelihood of a bounce. But because it's trading so close to the Bollinger Band, I don't think that that's going to be the case. But Nvidia is definitely showing some weakness. We do have this important trend line here at Nvidia. Tomorrow, that trend line level of support would be around 412. But over the next few days, the trend line increases. So it'll be around 412 to 415 would be this trend line level of support on Nvidia. AMD does not look good either, right? Microsoft clearly doesn't look good. There's still a bit more room to fall on everything that we just looked at. And Microsoft still has more room to fall as well. Clearly bearish, right? But you're not going short down here. You're waiting for a bit of a bounce maybe and then a reshort, but there's still room to go down to 317, 316 on Microsoft. Google, similar concept. You're not going short down here. You're waiting for a bounce to the upside for a reshort, and there's still room to go to 131, 132 area on Google. Amazon, same concept. There's room to go to 132, 133 on Amazon pretty comfortably as well. Netflix, unfortunately, has not been bankrupt yet, which is odd, but you know, Netflix is still in business, and there's still a lot more room to fall on Netflix, thankfully. And you can see that basically you can see that in the Bollinger Band. So the Bollinger Band here is pointed completely low. Even though Netflix had a very big red candle, the Bollinger Band is pointed sharply low. So Netflix can literally have another red candle the same size, and it still would probably still trade within the Bollinger Band, because tomorrow the Bollinger Band on Netflix is going to fall even more. Netflix can have another big red candle and nothing will, like, it still would not be overextended to the downside, which is showing a lot of potential weakness on Netflix as well. And we still need to look at Facebook. Facebook also does not look good. So yeah, across the board, these tech stocks are not showing bullishness, and they are still showing that they can have some more room to go to the downside. All right, so the tech stocks still showing some weakness. We can now definitely take a look at the VIX. So the VIX is also important to watch because it shows it has an inverse relationship to the market. So when the VIX is rising, that is generally a very bad sign for the market. It means that the market is doing poorly. And currently, the VIX was in this downtrend, and we came back, retested, and popped up. So generally, when this happens, the VIX can still, like, even if tomorrow we get a bit of a retest of support on the VIX, this can still continue up, because the MACD indicator on the VIX as well here just began to start curling upwards. So when the slow MACD line begins to curl upwards as well, that is very bullish for the VIX. It's very bullish for whatever indicator or whatever stock you're watching. So for the VIX specifically, if something is bullish on the VIX, then it's bearish for the market. All right, so now, yeah, we're just gonna have to continue monitoring that. But we also forgot to look at Tesla. But Tesla, also is not showing bullishness. But overall, large tech stocks are not doing any favors, and the indices are also taking a hit. So now we are getting close to this 437, 438 area on the SPY, right? The 437 area on the SPY. And it's still not really a good time to try to catch a bounce. We can easily fall much lower. And honestly, this can get really devastating to the downside. All this will take is people trying to blindly go long at a level of resistance or support, bounce a little bit, have enough people to go long, and then it can make another leg down. So we have to key off of the large tech stocks. and what the biggest movers in the market are going to be doing. If we stop seeing strength out of those stocks, then it's going to be very, very difficult to be bullish on the overall market. And yeah, let's wait for another pattern, another bit of structure on the market, and maybe we'll get like a better understanding. But definitely, you know, let's see how much lower this could go. And yeah, just keep in mind, if this does break below 433, then 420 is on the table. So yeah, just keep that in mind. If this breaks below this level, then there isn't that much going on until 420 in terms of like the, you know, orders and things to be filled and everything. So 420 is going to be a really, really big target if this breaks. So I'm really interested to see how that plays out in the next few weeks, and especially how this week ends up. And more importantly, I'm really interested to see how this month ends up. So yeah, you know, that's some pretty interesting stuff happened today. The market was weak all day, basically after the meeting, and it was just fell on its face. So it's nice. It's pretty fun and interesting stuff. So yeah, I hope you guys enjoyed today's video. We'll get better clarity and understanding heading into tomorrow. Hopefully we'll make some trades, but yeah, definitely heading into next week we'll get a better understanding of which way the market is really going to go, because tomorrow we can end up falling even lower, or we can get a bit of a baby bounce. But either way, overall this momentum is still bearish. So yeah, if we do go long, we're going to have to play very, very tight for little small pops. And yeah, all right, so I hope you guys enjoyed today's video. Hope this made sense. Please make sure to like, comment, subscribe, do all that good stuff, and I'll see you guys bright and early tomorrow morning. Thank you.